Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So, I want to first off say thanks to those of you that stuck around yesterday. Uh, had a lot to cover with our options session. Just volatility has gone nuts. Creates all sorts of opportunities for option trading, but also creates a lot of kind of like important um, situations that we also need to cover, right? So we spent a lot of time like digging into what higher overall volatility means for options, option pricing, option trading. So if you weren't able to stick around and catch that, definitely be sure to go back and take a look because spent a lot of time going over like all things volatility related as it kind of impacts options. All right, and actually one of the ideas we talked about was like kind of like this idea of like a safe haven trade, right? In terms of things that tend to respond more positively when the market is reacting more negative, right? Or when volatility moves up, what tends to respond more positively, right? And normally, like the go-to names would be TLT, so bonds, gold, silver, utilities, REITs, and even staples, right? I mean, like the latter three, mostly because of yield, right? People like want to park their money, get a yield when things kind of start to seem a little bit more volatile, a little bit more uncertain, right? Um, the big issue that we had over the last week is that gold. So, gold, really big reversal off its high, right? Silver, even worse, just a material breakdown, closed below the 200A. Utilities, right? Huge flush, broke below all of their near-term moving averages. Um, Staples, same thing, huge flush, broke through all of its moving averages, and REITs even like the sleepy REITs even had like a huge breakdown, flush below all their moving averages. So what you'll notice is that a lot of those safe haven areas, right, like quote unquote safe haven areas, got blown up last week too. So they acted more in line. So their beta was more in line with the overall market instead of like a negative beta, right? Treasuries, so bonds, really like the only haven asset that actually continued to still act like a haven, right? It kept powering higher as things really started to deteriorate and stocks and averages really started to sell off even further, right? And even though it's come a long way, it's very extended, right? A lot of gaps, so like gaps like all on the way higher for like the last like 2 weeks. I think like what we kind of spent time talking about is like I think it still makes sense to kind of stick with it for that reason is that because it's still responding how you would expect it to respond, right? Whereas gold, silver, utilities, REITs, staples, they all really got hit pretty hard last week. Bonds are still performing the way you would expect. They're still going up when stocks and averages start to slide, right? So people are piling into bonds. So even though things have really started to steepen, the slope is starting to steepen. There's gaps, right, and it's still overbought. I think it's worth sticking with. That being said, the risk I feel like the overall risk, the overall debit should be a lot lower, right? Because like the if a reversal does come, right, if we do get a bounce in the market and a reversal does come in bonds, the move lower could be pretty sharp. So that's why I've been pretty particular like rolling this up. um, I want like a lower debit strategy just because don't want to get like caught in like a pullback or like a crack maybe if it lost to 8 EMA, see like a material drop, right? Because again, acknowledging it is extended, there are multiple gaps to be filled on the way back down. So again, like what I'm looking at with this is more low debit, right? Like so you want like lower debit ideas, slightly lower risk ideas, right? And I want something closer to the money because it's come a long way. I don't know how much more upside it is, so I want strategies that are closer to the money, higher delta, right, and lower debit. So I mean that's really going to involve spreads. I mean like the kind of getting that combination right now because implied volatility is higher. It's probably going to revolve around some sort of spreads. All right, so as much as it's gone and as high as it's ran, I still think probably want to take a look at it or keep an eye on it, just for that fact that it is really like the only haven that's actually still acting like a haven, right? Like it's still moving higher when stocks are moving lower, when the averages are moving lower. So that's why, for that reason, like I feel like it's still worth keeping an eye on. All right. Um, so like I said, go back and check out the option session. The recording should be up soon. It was a busy night. We had a lot to go over, and if you like those videos and you're looking for more information on options education, or you want to be a part of that, or you're looking for more option trade ideas, please follow up with the link in the description of the video for more information on options in play. All right. Have a great night, and embrace the volatility. Some crazy trading ranges, a lot of action, and I expect it to stick around for a while. So there should be plenty to do over like the next couple of weeks. All right. Have a great night. I'll talk to you all soon.